Hey everyone, welcome back to the channel. The crypto bull run is in full swing, with huge crashes and then new all-time highs. And while everyone's focused on finding those moonshot projects, it's equally crucial to know which ones to avoid or sell. Today, I'll be sharing 5 cryptocurrencies that I'm selling right now, and more importantly, what I'm buying instead. But before we dive in, I need to make something crystal clear. This is probably the most important disclaimer I'll ever give. We're in the middle of a crypto bull run, which means practically every cryptocurrency will appreciate in value over the next 6 to 12 months. I'm not telling you to sell these coins because they'll crash. That's not the point. Instead, I believe there are better alternatives that either offer higher upside potential or similar returns with lower risk. Let me set the stage for what we're expecting in this bull run. Based on current market conditions, I'm anticipating Bitcoin to do about a 2x from here, potentially hitting between $150,000 to $200,000. Ethereum and Solana are looking at potentially 2 to 3x returns. For mid-cap altcoins, we're looking at roughly 5-10x returns, and low caps could potentially do up to 20x to 50x for the highest risk plays. The simplest way to visualize this is by looking at the altcoin to Bitcoin market cap ratio. In the last cycle, from early 2021 until the peak, altcoins outside the top 10 outperformed Bitcoin by about 10x. We're actually being conservative with our estimates this cycle, accounting for diminishing returns. XRP has dominated the cryptocurrency market, with its remarkable surge from 50 cents to $3, delivering an impressive 6x return to investors. While this growth trajectory has been exceptional, several market indicators suggest this might be an optimal moment to consider profit-taking and exploring alternative investment opportunities. The interest in XRP has reached unprecedented levels, with search volume data showing exponential growth. This pattern typically indicates peak retail investor participation, commonly known as FOMO, fear of missing out. Historical crypto market cycles demonstrate that such retail-driven rallies often signal local tops, making it a strategic time to consider portfolio reallocation. For investors looking to rotate out of XRP, 2 compelling paths present themselves. Ethereum and Solana represent more established alternatives with proven technological infrastructures, strong development communities, significant upside, more stable price movements. For those wanting to maintain exposure to financial institution-focused cryptocurrencies, the ISO 20022 ecosystem offers interesting opportunities. This global standard for financial messaging is crucial for cross-border transactions, banking communication protocols, international payment systems, financial institution interoperability. The key advantage of this rotation strategy is maintaining exposure to the financial infrastructure narrative while potentially capturing higher upside in a less crowded trade. With XRP's current valuation and market dynamics, repositioning into these alternatives could offer better risk-adjusted returns in the current market cycle. While XRP, Cardano, Stellar, and Hedera Hashgraph have already seen significant pumps, there's one gem that stands out: Algorand. Algorand stands out as a compelling investment opportunity in the current cryptocurrency landscape. Since its launch in 2019, the platform has demonstrated unwavering commitment to development and innovation, securing listings on prominent exchanges including Binance, Coinbase, OKX, Kraken, and Huobi. While Robinhood listing remains pending, this could potentially serve as a future catalyst for price appreciation. A pivotal milestone in Algorand's evolution has been the completion of its accelerated vesting schedule. This aspect previously posed challenges during the last bull market by creating persistent selling pressure. However, with all tokens now fully vested through the 2022 to 2024 bear market period, this supply overhang concern has been effectively eliminated. The current price point of 52 cents presents an attractive entry opportunity for retail investors, especially when compared to higher-priced alternatives. Algorand's tokenomics demonstrates several compelling advantages over its competitors. With more than 80% of the total supply already in circulation, future dilution risks are minimal. The current market capitalization of $4.38 billion suggests substantial room for growth, particularly when compared to XRP's $150 billion market cap. These fundamentals, combined with the resolved vesting schedule and established market presence, position Algorand as a potentially undervalued asset in the current crypto ecosystem. The platform's strong technical infrastructure and compliance with ISO 20022 standards further enhance its appeal, particularly for institutional adoption in the financial sector. Among the most critical decisions for crypto investors in this bull market is what to do with legacy altcoins like Bitcoin Cash, Litecoin, and Ethereum Classic. These coins typically experience significant price appreciation during bull markets, primarily due to retail investors' familiarity with their names and their widespread availability on major exchanges. However, this price movement is largely disconnected from any fundamental value or technological progress. These legacy coins are essentially just forks of Bitcoin and Ethereum that have failed to innovate or provide meaningful utility beyond their parent chains. When you see these coins starting to pump, it's often a strong indicator that retail FOMO is driving the market, making it an optimal time to consider selling and rotating into projects with stronger fundamentals. In contrast, Chainlink emerges as a compelling alternative among the old guard altcoins. Unlike its peers from the 2017 to 2018 era, Chainlink has maintained consistent technological development and innovation throughout both bull and bear markets. Chainlink's journey since its inception in 2017 is particularly noteworthy, backed by one of crypto's most dedicated communities, the Link Marines. These passionate supporters have maintained their conviction through multiple market cycles, contributing to the project's resilience and continued development. What sets Chainlink apart is its unique position at the intersection of multiple crucial crypto narratives. It serves as essential infrastructure for decentralized applications, plays a vital role in DeFi protocols, facilitates real-world asset integration, and enables cross-chain functionality. The project's technological foundation and diverse use cases position it well for significant growth once it finds the right narrative catalyst. Unlike the static nature of fork-based cryptocurrencies, Chainlink continues to evolve and adapt to market needs, making it a more fundamentally sound investment for the current bull cycle. The project's ability to span multiple sectors while maintaining technological relevance makes it a potentially explosive opportunity when market sentiment aligns with its fundamental strengths. The third cryptocurrency I'm selling is Sui. Sui has emerged as one of the most talked about cryptocurrencies on crypto Twitter in recent months, garnering significant attention and investment interest. While its popularity is undeniable, a deeper analysis suggests there might be more promising alternatives offering superior potential returns. As a Layer 1 blockchain platform designed for smart contracts, Sui positions itself as a direct competitor to Solana, leveraging both the Rust programming language and its proprietary Move language for development. The project has demonstrated impressive price performance, achieving a remarkable 4x increase from 80 cents to $3.80. However, when evaluating its long-term viability and investment potential, several critical factors deserve consideration. The fundamental question isn't about Sui's short-term price movement, but rather its sustainable value proposition in an increasingly competitive blockchain landscape. For investors attracted to Sui primarily because of its Move programming language and its potential to challenge Solana's dominance, Aptos presents a compelling alternative. Both projects share origins in the Libra blockchain initiative, but Aptos currently trades at approximately half of Sui's fully diluted valuation, potentially offering better value for investors seeking exposure to Move-based blockchain technology. Perhaps most concerning is the disconnect between Sui's market valuation and its actual ecosystem adoption metrics. While Solana's ecosystem buzzes with constant activity, featuring regular launches of new tokens, vibrant meme coin communities, and diverse trading opportunities, Sui's ecosystem remains comparatively quiet. Despite possessing technically sound infrastructure and demonstrating smooth operational capabilities, the platform has yet to attract the level of developer activity and user engagement that would justify its current market position. This disparity between valuation and actual usage raises important questions about Sui's ability to maintain its price levels, let alone achieve significant further appreciation. While the technology underlying Sui is undoubtedly robust, the lack of organic ecosystem growth and limited practical applications suggest that investors might find better opportunities elsewhere in the current market cycle. The absence of substantial developer activity and new project launches on Sui's platform, particularly when compared to the bustling ecosystem of competitors like Solana, indicates that the project might need more time to develop its ecosystem before it can justify its current market valuation. For investors looking beyond Sui, several compelling alternatives emerge in the high-performance blockchain space. Avalanche, Phantom, and Sui represent particularly promising opportunities, each demonstrating remarkable technical capabilities with their ability to process over 10,000 transactions per second. These platforms leverage the Ethereum Virtual Machine, EVM, ensuring compatibility with existing smart contracts and making them attractive to developers already familiar with Ethereum's ecosystem. Avalanche emerges as an especially intriguing option, distinguishing itself through multiple compelling narratives that position it well for the current market cycle. Its technical prowess is just the beginning. The platform's true strength lies in its exceptional accessibility to US retail investors. Unlike many competitors, Avalanche has secured listings on all major cryptocurrency exchanges, including the coveted Robinhood platform, which significantly expands its potential investor base. This broad market accessibility positions Avalanche uniquely for the anticipated retail wave. When mainstream investors begin flooding into the crypto market, they typically gravitate toward assets that are easily purchasable through familiar platforms. Avalanche's presence on Robinhood, alongside major cryptocurrencies like Bitcoin and Ethereum, gives it a substantial advantage in capturing this retail interest. Beyond its retail accessibility, Avalanche's ecosystem continues to expand across multiple sectors. The platform has made significant inroads in gaming, launching partnerships with major titles like Off the Grid. Additionally, its real-world asset, RWA initiatives, including collaborations with Singapore's Monetary Authority and the successful launch of tokenized funds, demonstrate its versatility and institutional appeal. The platform's market position is particularly noteworthy when considering its current valuation relative to its potential. While competitors like Sui have already experienced significant price appreciation, Avalanche maintains substantial room for growth while offering a more comprehensive and battle-tested infrastructure. Its ability to seamlessly integrate with existing Ethereum-based applications, combined with its superior transaction processing capabilities and established institutional partnerships, creates a compelling value proposition for investors seeking exposure to next-generation blockchain platforms. For investors weighing their options in the Layer 1 blockchain space, Avalanche's combination of technical capability, market accessibility, and ecosystem development presents a particularly attractive opportunity, especially given the current market dynamics and anticipated retail participation wave. The gaming and metaverse sectors of cryptocurrency have undergone significant transformation since the last bull market. Legacy gaming tokens like Axie Infinity, Engine Coin, and Gala, which dominated the 2021 bull run, have failed to evolve with the rapidly changing crypto gaming landscape. The play-to-earn model championed by Axie Infinity has become obsolete. Engine's infrastructure remains stuck in the past, and Gala's ambitious vision of becoming crypto's Steam equivalent never materialized. In their place, a new generation of gaming projects has emerged, led by innovative platforms like Superverse, Xborg, and Seedworld. These projects distinguish themselves through their fair launch tokenomics, where tokens are initially distributed through decentralized exchanges at lower market caps. This approach has fostered robust community support and allowed early supporters to participate at attractive entry points. The metaverse sector tells a similar story. Despite recent price appreciation, projects like Sandbox and Decentraland have shown little development progress during the bear market of 2022 to 2024. Wilderworld presents a compelling alternative, having maintained consistent development throughout the downturn. Their imminent launch on the Epic Game Store, featuring multiple games and an advanced metaverse world, demonstrates significant technological progress beyond their competitors. For investors seeking exposure to gaming and metaverse sectors, these newer projects offer superior potential returns compared to their legacy counterparts. Their combination of fair launch mechanics, active development, and strong community engagement positions them well for the current bull cycle. Remember, We're in a bull market where almost everything will go up. The key is maximizing your returns by being in the right projects at the right time. Don't just hold coins because they're pumping now. Think about where the next wave of adoption and innovation will come from. If you found this helpful, make sure to like the video. Also, if there is anything, then drop your thoughts in the comments below, and I'll see you in the next video. And always keep in mind that nothing in this video is a financial advice. These are just my own thoughts based on my technical and fundamental analysis.